with that, let's go ahead and get started. So I just wanted to lay this out first. In beef production, of course, there's a lot of different marketing systems. Our presentation tonight is really geared towards the cow-calf operator, but of course, some of you may, maybe you have cows, but you may also be involved in stocker, or some of you may even take cattle out to a feedlot. There's just a lot of different places that you might be in this beef system. And of course, it's very separated out. And then, of course, one of the trends that we've seen in the last few years, particularly since 2020, we've seen more and more cow-calf operators who've maybe kept back a piece of their herd and then taken that all the way to a retail end on their own operation as well. And so there's a lot of different places where cattle producers in particular may end up at, but the focus of this presentation is really going to be on that cow-calf side of things. So this is a look at, kind of looking backwards so that we can kind of see where we're at today. And a lot of you have probably seen similar charts to this before, but looking at that total cattle inventory numbers, this chart goes all the way back to 1962. This data is from the Livestock Marketing Information Center, and there's just a lot of good information that center does provide out. But as you can see, we really topped out on cattle inventory numbers back there in the mid 70s, and then have been, all down ever since then, and had some increases and then decreases over time. But of course, just significantly fewer cattle numbers than we had 40 years ago, nearly 45 years ago, I guess now. So, but with that, we really think about that cattle cycle. And Robin alluded to some of this a little bit in the beginning, and a lot of people will talk about this being a 10-year cattle cycle, and that may be a little longer or a little fewer years sometimes in that cattle cycle, but it does tend to be around a 10-year cattle cycle where we have a real increase in cattle numbers, and then something happens or profitability goes out. There's a big sell-off, and then we kind of go down on numbers. It really tends a lot of times to be tied to the the supply and demand in particular, but we over that time, those cow numbers and those calf numbers all end up tied together, and then gives us opportunity for profitability. And then we kind of go to the side of where there's not profitability or losses involved, and so pushes people back out of the market. So, and then along with that, wanted to look at some average annual cattle prices. And in this, as you can see, that dark blue line is the 500 to 600 pound animals. The red line is the 700 to 800 pound feeder steers, and then that blue line is the the fed steers. And as you look at that, you can see where we actually have these little cycles going, where we go down to a low level, we kind of raise up, and then we have a dip again. We raise up and then have a dip again. Now, of course, 2014, which was that high water mark that a lot of us can remember very clearly, those were a few other factors that were in there, but again, kind of raised up, and then we really dipped down in that one. And it feels right now like we're in that upward swing again. And I think a lot of people would probably agree with we're in that upward swing once again. So, along with, of course, there is the cattle cycle, and that is really important to be thinking about with cattle. But then there's also that seasonal nature that comes out. And, a lot of the pieces that come into that with the seasonal nature of the cattle, our weather, these animals, of course, are outdoors. We have the forage, and then the grain production as well. So there's a lot of different factors that lead into that seasonal nature. But along with those outside factors that impact us on the cattle, there's also just seasonal patterns that come into the cattle market, and those tend to be fairly strong. And we're going to show you some charts here in just a moment, but they do vary for different classes of cattle, and that's one of the things that I want you to look at closely when we go into these charts here. And then it's a consideration that you want to think about for retaining ownership or stocker considerations as well. So if we take a look at this, this slide here, this is the 500 to 600 pound animals. I want you to really focus on that red line in particular. And so we look at that January into March or so, we kind of hit a high level, and then we kind of trail off throughout the year, and then kind of hit like a low level, and then start to kind of come back up again. We have a lot of people who may tend to sell in that last quarter of the year. But if you look at the seasonal nature of the markets, and this chart is 2011 through 2020, that's a different time frame where those high water marks are at. And then on the flip side, we look at that 700 to 800 pound animal, and we look at that, and we kind of go down to a lower level, and then we move back up to a higher level later on in the year, and then start to dip back down in December. So what I really wanted to show you with these slides is just for yourself to consider, with the program that you have set up. You could even take that back to your calving time frame, but also when you are typically selling those animals, and whether you're selling those at weaning or whether you're retaining those, maybe thinking through, what does that look like in terms of when you are selling compared to the seasonal nature with the size of the animals that you're selling. And then if that's not fitting the program that you would like to, or if there's a reason that you think, well, maybe I should look at something different, then you can kind of start to think through and work the numbers and crunch the numbers. For example, if you're thinking about, well, I'm always selling in the fall, but I'm seeing that there's a seasonal nature that's lower, maybe I want to consider hanging on to some of those animals, and I can feed them for a little longer. Crunch the numbers on that, looking at the feed costs, looking at labor available on your farm, if you have capacity to do that, if you have land to do that, the resources available to do that. Not necessarily telling you to do something like that, but more so just to consider, because I've been on a lot of farms where we're sitting around the kitchen table looking at numbers, and we're looking at what that operation is doing, and really we're kind of making these decisions because we've always done them that way. Well, it's good to reevaluate that. And I think a lot of you who are in this, listening to this presentation tonight, you probably wouldn't be at this presentation if you're not being proactive at looking at those things. But just a good reminder to maybe be considering if there's some opportunities of doing things a little differently than you have been. All right, let's look at some of the things along with calf marketing. So some folks, and there's a lot of different size of operations that are represented in the rooms as we're doing this tonight. But so some people may not be able to sell their calves in more than one market group, but if you have the opportunity to, it might be wise to think about selling the steers versus the heifers in different groupings, or maybe pulling off those heavier ones and selling those at a different time, and retaining those lightweights and adding some weight onto them, or thinking through the feeder heifers versus keeping back for replacement heifers. And then thinking about, just what's the best marketing alternative for each group. So either weaning and selling, or retaining ownership for a little while longer, and then when and how to sell those animals. So what does that look like, and how does that fit? So trying to think through, is there some different ways that I might do this marketing on my own operation? So, and then thinking through about adding value into those calves, just some of that individual animal management that you might be considering, And then also just thinking through about that animal, the animal groups. What's the lot size? Is the lot size the most advantageous to maximize those dollars as you're selling them? And then is it a uniform group of calves that you're selling? So, and then of course those genetic and improved muscle and frame. So, so if we take a look at this, the cow-calf returns, as we look back, this goes back 30 years or so. As we can see on there, there certainly are a handful of years with those negative returns, and a lot of those years end up, in that maybe $75 or so. If we took a look at that on an average, up until that 2004, probably about that 150, that felt like a very good year. And then we had 2 years in a row. And then of course we had that extreme outlier with the 2014, and 2015, of course, was an excellent year as well, but was cut down quite a bit compared to the year before. But then, we decreased things, we decreased the profitability, and then we had several years that were just really struggling in this enterprise. And now we're kind of swinging back up to the upside of it. And really, if you look at this graph, there's only 2 other years that are better than this year that we have in those numbers. So things that we need to really be thinking about as we're making our decisions. This is a chart that talks about the estimated average cow-calf cost, and Robin went through some of this earlier, but if you go back to 95, a lot of those cow costs were more like $400 or $500 or so, and now the last 2 years, let me see if I can pull that down, on this chart anyway, show close to about 925 or so for that. In the KFMA data, the numbers that generally stick out are that, the cow-calf, cow-calf guys, the costs are somewhere between $500 and $1,000 per cow. And Robin showed that on her information as well. And so monitoring that and really knowing where you are at in that cost is just a really important piece in with that. So, but there is just an extreme amount of variability in those numbers. So, all right, let's take a look at some different options for selling. Of course, the sale barn, that's, I think, probably the very first thing that comes to all of our minds is, obviously the easiest way that sales can be made. There's established processes there. You have a very high potential for not having risk of collecting your money when you go through a sale barn. And, but one of the downsides with that is it depends on who's at the sale, how many people have gotten there. And those people at that auction are determining the value, the value of that, of those animals. Video auctions, of course, has become just a lot more popular in the last several years. And, it just opens you up to a much wider range of market participants who can be bidding on that lot. And so that's another good way to think about. And then also, maybe just selling directly off of the farm, private treaty. You don't have your commissions and you're not transporting those animals, but there, you would want to come up with some established ways of how you're going to determine the weights. So working with somebody who has a certified scale, and there's more credit risk that's involved with that, or there is credit risk at a much higher level than those 2 previous options as well. But part of what we want to really look at is there's also the use of futures and options. I am not going to go into options tonight because that would easily take this whole entire time just to go over options. At the end of this presentation, I do have a list of resources for you. And one of the resources that I want you to look at is a video recording that Brian Coffey from K-State did about a year ago. And he does a great job of going through options and also some detail on futures as well. And so I'm going to give you that link when we're all done. And that's what I want you to look at. But options can be a great strategy. As we were talking here just a moment ago, as I was showing you those charts and the seasonal tendencies on those prices, and even as going back and thinking about that question that Robin laid out as well of, is this a good time on that discussion question to lock in things if you can lock in a profit? Utilizing options or utilizing futures are one way that you can do that. And it removes that one specific day that you're going to the sale barn or having your video auction. So it opens you up to so many more days that you can actually make those sales. But you do need to be comfortable with what you're going to be doing if you utilize either options or futures. And you need to make sure that you understand that thoroughly before you go into that type of strategy. We will talk a little bit about the hedge account. So if you utilize a hedge account, you're going to be working with either a broker or have an online account. And when you make trades, so if you see a profitable level that you want to sell and you want to utilize your hedge account, you're going to pay commission when you make that trade. There is no physical delivery, but your futures level is locked in. So like at the sale barn, when you go and you sell those cattle, there's physical delivery. Somebody else takes them off your hands, you take a check and you're done with it. In the hedge, you're locking in a price, but you're not actually delivering those at some point in the future. Then you will have to actually make an actual cash transaction. You can either buy or sell futures in your hedge account. If you are a hedger, as you all are as cattlemen, you should probably be selling futures positions and not buying them speculatively. It's important to note with a hedge account that the sales are marked to market every single day. And if the market goes against your position, then you're subject to margin calls that I think about everybody has to ACH that money the next day in today's world. So you need to be comfortable with that and what that means to your operation and your line of credit if you choose to use the hedge account. But a hedge account does give, I don't want to scare you. I mean, a hedge account serves a really good purpose, and it allows you to make sales when you may not have your cattle ready to sell. Either they're not the size that you want or weather or whatever those impacts are, but it allows you to make the sales when you may not be ready to actually make that physical delivery. So we're going to focus on the cow-calf side of it. And if we're thinking about that hedge account, if we're hedging in this cow-calf environment, we would be utilizing the feeder cattle market. And just so that you know the basis for that, one feeder cattle contract is 50,000 pounds. If you think about that, if you think of the tare and the gross weight of a truck, that's about a pot load of cattle is what that works out to be. So, okay. So, markets are changing. So this graph is the November 2022 feeder cattle chart, and it's a 3-year chart from barchart.com. But the reality is markets go up and they go down and they go up. And it's just in the moment, it's really difficult to know what the next day the markets are going to do. If you just think back to yesterday and today of the markets trading, yesterday grains were all up, just enormous amounts. Live cattle were up and feeder cattle were off a little bit. Today, again, most of the commodities were higher, but both live and feeder cattle were lower today. So it's hard to know in the moment. And that's a piece of what just makes marketing just very, very challenging, because they trade and you don't know really second to second while they're trading, if they're going to be higher or lower before the end of the day. So it's important to think back about that seasonality nature that I talked about earlier. But then there's also this, this practicality of the markets are trading every single day as well. So before we get a little bit more into creating a marketing plan, I just wanted to go through a few marketing terms, because I will talk a little bit about some of this, or there are things that are just really broad-based that you hear if you're listening to any kind of market information. So there are two primary ways to look at the markets. So one of those, and this is where I think most farmers come down to, is fundamental analysis. That is thinking about what are the things that are actually impacting these cattle. So we're thinking about weather, supply and demand. When we talk about cow numbers and that cow numbers are lower than they've been, that's a supply and demand factor. So there's a lot of pieces that go into the supply and demand piece of that equation. It may even be from the feed stuff. So maybe shortage of hay, or readily available grain if you're feeding grain. So, and then currency valuations. Today, the biggest fundamental piece of news that's wiping everything else off of the board of even really being a thought is really the situation in Russia and Ukraine. And there's just so much uncertainty with it, that's just the top of all of the markets today. And that's a fundamental issue. People are trying to figure out how is that going to impact our commodities, whether that be crops or livestock. And then along with that, crude oil is probably the easiest one to see that with. So sometimes there's just big factors that take over all the other issues, but that's fundamental analysis. And then the technical analysis, that is when you are trying to identify patterns to predict the future movements. So it's thinking back to that slide a couple back where we looked at those charts, and people that are looking at those charts and they're trying to decide based upon the chart, will the market move higher or lower, or how much higher or how much lower can the market move? I would say in general, most farmers and ranchers fall into the fundamental analysis side of it. If you're just a pit trader, that just trades the markets, you may primarily be a technical trader. So, but those are really important, different ways that people look at the markets. So it's important to know that. And then also I want to talk a little bit about a hedger versus a speculator. You as a farmer or rancher should be a hedger. So the hedger is a trader or commodity producer who places a trade in order to protect themselves against price fluctuations in commodities. So you are a hedger, and that's where we want you to operate from that perspective. And a speculator is a person who invests in that stocks, property, commodities in hopes of making a profit. Those speculators, they may not even know what your commodity looks like. They probably know what a calf looks like, but they may not know the difference between a bull and a cow. They may not know what a bushel of corn looks like. Those speculators, though, are very important to our markets because one thing about it, they add a lot of volume into our trades, and they can push the markets higher than they really should go from a fundamental perspective. But we all know the other side of that story is sometimes they push the markets lower than they really should go from just a fundamental perspective as well. But they are important to our markets because sometimes they're willing to buy or sell when everybody else in the country from an ag perspective is kind of out, where the speculator may be taking a position that the actual producer may not be willing to at that point. So they serve an important perspective. So let's shift gears just a little bit, and we're going to talk a little bit about a marketing plan. And a marketing plan for your cattle is as important as it is for your other commodities as well. So a marketing plan is just creating a plan for how you're going to sell your production. So we're going to focus on livestock, but this is just equally as important. If you raise crops, it's equally as important for your crops or any other commodities as well. So making a plan for how you're going to sell your production. And what we need to know with a marketing plan is, what quantity are we thinking about? What's our quantity? What time frame we're going to do, and then what is our break-even price? And so that wraps back around to what Robin was talking about here a little while ago, is we really need to understand our cost, understand our production, and then think about what is that break-even price. And once we understand what that break-even price is, that helps us to be able to be more confident in making our sales, and possibly not just selling at the sale barn, but maybe using some of those other tools that allow you to sell where, if there is a profitable level available to you. So marketing plans are always important. I mean, I feel like people need to make a marketing plan every single year and then review and adjust. But you also need to review that marketing plan regularly. If we were, if we were thinking about these markets 2 months ago, we probably didn't have Russia and Ukraine on our minds like it is today. So that's something majorly that has changed, that we need to just have in our minds as a thought of what do we need to be thinking about differently than we did before. And then also reviewing our marketing plans when there's been changes in your business. So maybe for some reason you've had an increase or a decrease, or you might just be doing things a little bit differently, or maybe seasonality, you've changed some things. But reviewing your marketing plan both on a regular basis and monitoring that, but also if you've made any sort of change in your operation as well. So how do we get to our price? So we have a cash price, and the cash price is futures minus basis. So futures are live cattle or feeder cattle, and those futures are traded every single day, similar to like the stock market. So where stocks go up and down, futures also go up and down every day. This is traded at the CME Group, formerly known as the Chicago Board of Trade or the Chicago Mercantile Exchange. And then basis is the difference between the futures market and what you can receive locally as your cash price. Basis can be described as that local demand barometer for the demand for your calves in this instance. And a really good example this particular year is thinking about the number of calves that are out there and how dry we have had been until recently, and what those pastures were going to look like, and whether or not people would really, what capacity they'd be able to fill those pastures to. So if the pastures are lush and people can take in a lot of calves, then that's going to drive up those prices. But if those calves if there's less pastures that are in condition and those calves have to be shipped farther away, that's going to eat into that sum. Now, the reality is we are in a very profitable environment, or more profitable environment than we've been in for a lot of years. So some of that will help. There will be a demand for those calves anyways, but the pasture is one way that you can kind of think about what that local demand might be. And then also utilizing this beefbasis.com website. Robin alluded to it earlier, and then I'm going to have that. I have that on my resources as well for you to look into a little more later on. So one question that is, where do you find the futures market? Where can you look? So the places that I like to look at futures market, of course, going to the source, which is cmegroup.com/trading/agriculture. and you can go down, you'll get the grains, and then also the cattle are on there as well. So you can just scroll down and you can click on the either the feeder or the live cattle, and you can see all of the quotes there. I also like barchart.com, which is the chart that I showed you here a few slides back. That's where I got that slide off of. And then I also like agweb.com. Agweb has great ag news on it. And then you can also go down on the right-hand side of that website. It defaults to coming up with the grains, but there's a tab for the next tab over is livestock. Then it has equities and I think metals on there as well. But you can also click on that marketing tab above that, and you can get even more things, like you can get milk and things like that on there as well. So you can get a very wide array of commodities just in one place. So that's a great resource there. So, all right. So if we're going to create a marketing plan, we first need to think through the quantity, when you're going to sell your calves and what weight you're going to be targeting to sell those at, thinking through where you're going to sell those calves at, and then when do you need the money? When, we always hate for people to be selling just because there's loan payments due, but that's the reality of how the cash flow needs to work as well, either loan payments or other bills. The way that I would prefer that people do that is, as much as possible, think through the timing that works well with your farm, and then set up your loan payments to match up with that. So it's something that you're doing. You're making that decision and being proactive rather than having to act in a reactive way. That's maybe not the best thing for your operation. So on the quantity, we're going to think through that number of head and the anticipated weight. And then knowing that cost of production will give you the confidence to make profitable sales levels when available. So I'm hopeful that when you go home, that you take that tool that Robin gave you, run through your own numbers, thinking through when you're going to be selling your livestock, and then thinking through, are we at profitable times? And if we are, is there some sort of marketing tool that you want to utilize at this time or not? So, or the insurance options that Jenny's going to talk about here in a little while. And then where are you going to sell at? Are you going to sell through the sale barn, private treaty? What method are you going to use? So, okay. So what we're going to think through. So in getting ready for this, one of the things I pulled out was the Kansas Farm Management Association data. So Kansas Farm Management Association is about 1,800 farms across the state of Kansas that does puts all of their finances together. And then there's also some opportunities for doing some tax planning as well with them. But with that data, the KFMA data, of those 1,800 farms, the ones that have a cow-calf operation, it's an average of about 140 cows. So that's why I'm using that 140 cows on there. Just based on the work that I have done with farmers over the last several years, I was going to guess that it was probably between 100 and 150 was the average, and 140 is what the KFMA data shows. All right, so 140 cows, and then if we say that it's 90% calf crop, that would get us to 126 calves. This is the math that I want you to do on your own operation, is how many cows, what percentage would be your calf crop, and then how many calves does that come out with? And then multiply those calves by how many pounds, what's the average weight that you anticipate that you will sell your calves at? So in this example, I'm going to say 600 pounds. So that's going to come up with 75,600 pounds. So 126 calves is, in this example, equates to 75,600 pounds. Part of the reason that I'm looking at those pounds is because I'm thinking about either that hedging or that option strategy, and how many contracts would that be? If you recall from that slide a few times back, feeder calf market, the feeder market is the contract is 50,000 pounds. So we're right there in between 1 and 2 contracts is where we're at, which is, wish it was 50,000 or 100,000. So also, when are you going to sell your calves, and where are you going to sell at? So one possibility with this operation, it has to fit into what works for your own operation. But what I laid out here is that with this operation, they are most likely going to sell at the sale barn. And I think that's where the lion's share of the calves for a lot of the cow-calf operations do end up at the sale barn. But it may be wise to utilize a hedging or an option strategy now, or sometime between now and when you're ready to sell at the sale barn, if there's an opportunity to lock in some profits. And if you're this particular operation, if you think about selling at the sale barn, you've got one day, maybe 2 days that you're going to sell those calves. And you're limited, if you're at the sale barn, to who's there, who's making that market for you that day. But if you do decide that looking at either options or hedging is a good strategy for your farm, and willing to learn about that, that will open you up to a lot more days that you have available that you can actually do some marketing and protect yourself, and then offset that as a cash sell later on at the sale barn. So that's a piece that I want you to really think about. So I told you here a moment ago that I have some resources. So there's this the options presentation, which I alluded to earlier. I really would like anyone who's interested in either options or futures, I really encourage you to watch that. That's a resource that Brian Coffey from K-State did about a year ago, and it's really good. It's about 45 minutes long. Also, this beefbasis.com, that's a great resource. And then you have the next 3 things in with your resources that you received this evening. So Hedging of Livestock, that's an Iowa State publication, and Iowa State has some great resources on livestock as well. This is another resource. And then this third resource is from Kentucky, and that's a good resource as well. So just to summarize, it's really important to create a marketing plan for selling your production. And I really do encourage you to do that. Along with that, you really need to think through your break-even cost. It is, for the average Kansas cow-calf operation, it is really difficult to sell more than 1 or 2 times in the year. And so that's a thought that you almost need to be more careful than any other, some of the other commodities with that. But being mindful of it is really important. And then watching the markets and also monitoring those seasonal trends will help you with that. And then, really the bottom line is the best way to learn how to market is to go ahead and do it with a small amount. And that would be, it just always is the best teacher for all of that.